Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning, folks. Thanks for joining me this morning. It is Monday, the 17th of November, 2025. This is episode number 2714. Let's get into it here. Last week was a very odd week. Had to flip days due to some family circumstances, and then more family circumstances, and I ended up not being able to do a TraderBite all week except for Tuesday. I think. So that's where we are. Let's take a look at where we are overall in the market. So looking at the pre-market summary sheet from Convergent Trading, we see that the market's on a mild risk-off sentiment overall. There's not much to report in terms of earnings, but I would invite you to go to Convergent Trading's Twitter channel or X and take a look at the sheet. Every morning it's posted at about 7:45 Central, right when the TraderBite begins, to kind of catch up on what's there. Overall, it just doesn't. It's not worth it to spend a lot of time going over the news. You can get that yourself. The key elements that I'm paying attention to are, where's the RN and RVol for the session? That gives me an idea of how much activity the market's experiencing in terms of relative range and relative volume. Again, for those who are unfamiliar, RN is relative range. It is basically the range right now as of this moment. In fact, it's updated in 15-minute brackets. So it's the range as of 7:45 Central, where it is at that moment versus where it has been on average over the last 20 sessions. And what this 143% says for the S&P and 146% says for the NASDAQ is that we're 143% higher on today's range versus the average of the last 20 sessions at this time. The RVol was quite high in the overnight on the open. There's a fair bit of movement on the open last night, Sunday night, but has come back into line here so far. So we're seeing, one of the interesting things we're seeing is crypto just completely getting hammered along with metals. Silver has come off a fair bit, but crypto's quite a bit of volume and quite a drop from their, $125,000 high. So they're in a fair bit of a drawdown. European markets seeing risk-off sentiment pretty strong this morning. The U.S., not so much. The U.S. is about 2 rotations away from being flat. So I'm not too concerned, although the S&P is pushing the overnight low. Looking at the S&P, it's in a multi-distribution profile this morning. Active price discovery so far, 185,000 contracts have traded, which is relatively good. And the inventory is 62% long. The range is quite wide, as we had discussed, 66 points versus the mode over the last 252 sessions for the overnight range is 20 points. That seems kind of low, doesn't it? The edge of one standard deviation is 53, and we're at 100. We're at 67 points. Okay, so those are all inputs to tell us what the overall market condition is, what the participation level is. So when we come into trading, we know, okay, this market is relatively aggressive this morning. This is my S&P overview chart. Let me describe these. Somebody asked me to take a moment to describe these. This chart is the active chart. This is used. The active chart is a 2x8 PNF. The footprint chart right in the middle of the screen is also 2x8 PNF. The bottom right here, bottom left, is a TPO chart. All of the products that I look at and trade are laid out the same way. This is a TPO chart, a market profile chart. And then over here to the right is the intraday chart. Which would you guess is the most important chart in terms of figuring out the market narrative and bias? Well, I don't have the 7 to 14 seconds it takes for YouTube to get you to where I'm asking a question, so I'm not going to sit here silent for that long. Instead, I'm going to tell you that the key chart is right here. It's the intraday chart. The TPO chart gives me, this is RTH only, so it's very steady, but it is the first chart I look at when I'm doing my homework. This is the TPO chart, sets the stage homework-wise, prep-wise, okay? And what this tells me is what is the overall quality of the auction for that day versus, an auction that clearly hasn't found value. Whereas, let's say Friday, we open, we test down, we come back into the range, and then we establish value right here. That's a TPO chart that's telling me that. It's telling me where the single prints are, which, by the way, single prints have been around since 1983. This is what certain educators call a fair value gap. The algos and the secret code and the secret algos. That's called a fair value gap in some circles. But what that is a set of single prints. We only look at single prints for the entire session, but some people look at single prints intraday as well to figure out areas where the market has slipped through or the market has become initiative or impulsive, I should say, where the market is pushing hard, right? So the TPO chart really gives me an idea of where the market, the quality of the market structure, and the overall trend. You can see very clearly here that we are making lower highs. If we make lower highs, regardless of if it's making lower lows, we don't really care about lower lows, but if it's making lower highs, this is a market that's one time framing down. In other words, the market imbalance is to the sell side. So that's a big clue. That's a first clue. Market imbalance to the sell side unless it breaches the prior day's RTH high, in which case, there's a potential reversal here and an additional opportunity. And so that's where it starts. But intraday, this is the chart I'm watching. This is a full session, 30-minute bar chart. The blue profiles are RTH. The orange profiles are full session. And here we're seeing really what the auction is doing. There's a volume profile. We're using volume profiles here. And what this is telling us is how the auction is progressing in real time, full session. So we've just come into this red zone here, and we've tested it. We have basically a double bottom at the overnight low, and it's looking kind of weak. When I zoom back out on this chart, you can see there's a fair bit of weakness, right? We've pushed up, made that big high up at 69.41, pulled back down, lower low versus the last swing low. Then we came back up and we made a lower high at 6,900 before coming down and putting in a higher low versus the prior swing, and a lower high versus a prior swing. What is that telling us? What is that telling us? It is telling us that we are in a large range consolidation mode. The market is waiting for more information. We've had a lot of information. The markets, the government's been shut down, it reopened, and so on and so forth. And we gapped higher last week as a result, and we've basically sold that off. And what we're doing is we're exploring these middle of the range prices back and forth. And what that tells me is I've got to be careful committing to trades. In other words, I have to be pretty aggressive about covering risk. Let runners run per plan, but cover risk pretty quickly whenever possible. Today, what we have is we've poked above the high we put in on Friday. You can see the overnight high is slightly higher, and we're coming back in. We've got settlement right above us, and we are trading basically this high volume node. We are opening basically on a selling imbalance intraday, but I'm suspicious. We still have the single prints below us. We have 2 days of overlapping value. See where the point of control is, point of control. Despite the lower high, what this is doing is it's telling us, hey, the market has tested prices below on Friday and managed to come back in and put an overlapping value area to Thursday. While this on a candlestick chart, on a daily chart, on a bar chart looks bearish, to me it looks suspect. To me this looks like buyers have stepped in. We've gone with prices low enough that buyers have stepped in. So Friday we tested the overnight low and we found buyers and turned back up at 66.70, and we managed to bring prices right back up into Thursday's high volume area. This is suspicious activity in that despite the price action, what value is saying is they're not seeing value lower. They're not seeing prices needing to stay down. So to me, the selling is suspect. I do have this line in the sand zone or over under zone below. I do have this zone above. We are likely to open right in between here, so that means my hands stay off the mouse for the open until one or the other is breached. If we end up squeezing down, then the low of last week or Friday's low at 66.70.50 becomes vulnerable, but I'm expecting more chop. Now, we have good range. We have decent volume. But it could go dead. It's also a Monday of options expiration week, so it could go dead here, but it's really hard to read or form a bias based on where we are. We've clearly rejected these lower prices before. You could see right here we've had clear rejections of these prices. It's a poke and bounce, and we're heading down in that direction again. To me, this looks very suspect. So I leave you with that. My expectation for this morning overall, let's change the colors. Back to the changing colors tradition. My expectation here is a poke further into the single prints from Friday, consolidate, push up, higher low, bring us back to the prior settle, and then most likely come right back into this high volume node value area type of scene for a potential breach higher or hold. Most likely hold for today. That's the primary scenario. The secondary scenario, given conditions, is to open, become responsive up, get us our settlement, push into the DGPs, which are at 68, 68 and basically 70, where we have the point of control, full session VWAP, and full session mid. Push in here, get into this range, and consolidate for much of the session. Just basically form overlapping bars on the 30-minute chart until we break later. Most likely, again, the expectation is break on the high. I'm just not seeing enough out there that tells me that the sellers are in control from a macro as well as a technical perspective. I'm looking at both. I just don't see it. The third scenario is a test up and then a break lower, and that's the better opportunity scenario for day trading, of course. And that's what we do is day trade, is pull up, break lower, pull back, a weak pullback into this red zone, sets up a short, and then now we're targeting the 66.70 and 66.50 below. That's scenario 3. Not a likely scenario today, but those are the 3 plays. I spent a bit of time going over the charts and stuff, so I've kind of killed the opportunity to talk about much else. But crude here is just holding in the middle of the range. Crude has been kind of a poppy trade. We're opening, note with crude, we're opening, and we don't have much in terms of a push higher. We're opening inside of the range in crude, so I'm expecting crude to also be held by the value area for much of the day unless news breaks. So I'm not expecting crude to be all that exciting today. The NASDAQ, the NQ's been relatively interesting because it is really getting chopped up with the AI, kind of overcommitment in AI. But look at the NASDAQ. The NASDAQ has come back in and basically settled or closed right Friday and Thursday the same. So Thursday rejected higher prices. We rejected higher prices in the NASDAQ. And then when we came in Friday, we left these single prints down below. Same scenario as the S&P really. And what we've done is basically tested down and pushed up. So until it clears the low it has put in, unless it clears the 25,000 here, the NASDAQ is very likely to hold and start squeezing higher, is the most likely scenario. I'm not telling you to get long. These are not recommendations to trade, but we've tested below and found buyers. You could see single prints, all, excess lows right down here. We've got excess highs at the swing high. It's probably done to the downside, most likely, the way it's shaped. Look at how the profile tapers. Very little interest as prices went lower. And then we have our volume kind of stocked up above. So in my opinion, it's much more likely to push back up into the 25,600 if it holds the 25,000 even in the NASDAQ. All right, that's 20 minutes of your day invested in me. Let me know if you disagree, agree, if it's clear, if you understand where I'm coming from in terms of my views on the market. The views on the market I'm sharing are built on the auction and what the market is actually doing versus indicators or anything like that. I'm just looking at the auction as it is, as if you're standing in the pit. This is the approach that I espouse, and it's something I've been doing for, well, since 2005 when I stopped being a high volume scalper. So 20 years or so. Good luck, everybody, and I'll catch you tomorrow. Tomorrow, I'm going to the FIA Expo. By the way, if you're going to the FIA Expo, let me know. I'll be there all day today. And then I'm giving a talk on the last panel in the large hall. I'm giving a talk at the FIA Expo, and so I'll be there. The FIA is today and tomorrow here in Chicago. Very, very big, very popular expo, and I'll be there all day. Take care.